Hello, with me today I have Alex Crooke, Portfolio Manager at the Bankers Investment Trust. Hello, Alex.
Hello.
The Trust has a great track record of performance, and even after the coronavirus crash, the share price is back to where it was before, near a record high. Could you please explain your stock picking process and why you think it's been so successful?
Well, we employ a lot of expert stock pickers from Janus Henderson, covering specialist markets. So it's the US or Europe or Japan, China. And these experts, know their markets extremely well and are picking the best stocks in a sort of smallest portfolios. So that's 20 to 30 names in each sort of geographic region. And then I act as aggregating those and act as asset allocator as well. So trying to get the decisions right of where to put more of our investments into different of those regions. And I think really what's been successful over the years, I think, is an emphasis on quality. So we try and buy good quality names, companies with sound balance sheets, so not too much debt to put things into under pressure, and really good, strong cash flow generation. So we think actually the best companies to own over the long term are those that generate more cash than they consume in simple terms. So they're still able to invest. They're able, hopefully, to pay us dividends, which we can pass through to our shareholders. But it puts you into these better quality names. And then finally, we look to try and not overpay for those names. So looking for some element of value, but we clearly want growth as well in terms of profit growth. And I think it's stitching all that together with maybe that attitude of taking a sort of longer term view of life, trying not always to get things in the short term right, but get things in the long term right, that I think has stood us very well over time.
I mean, the Trust has a significant holding in the big American tech stocks, which includes some of the best performers of 2020 so far. Now, that was a great call owning those stocks, but I mean, what's your view on them now? Very much in the news at the moment, they've been flying. I mean, are you still a buyer at today's prices? Or do you think the time to sell is getting closer?
Well, we're finding opportunities, maybe not in some of the more obvious names in the market, the largest Amazons, and so we own them, but we're not particularly selling just at this point. I think what the lockdown did is accelerate some of those trends that were there. So whether that's digitalization, pushing things online, shopping online, it just accelerated those trends again for these companies. So actually they've benefited very well. So we're still holding on to most of those. We have been taking some profits in some names around the social media sort of companies. But we've also been finding new investments. So something like Intuit, which is a financial software business, which we again think some of those trends of remote working should work very well for a business like that. So there's still opportunities, but on aggregate, yes, I think we're more of a holder and moving towards probably the phase where we start to take some profits in these companies.
Okay, I mean, of some of the ones that you have been pruning, are you able to name some of them?
I think, yes, we can. I mean, Facebook, we've taken a little bit out of that stock. It is the most obvious one, I think. There's lots of challenges in some of these names, but I think that, around the edges, I'd rather not name all of them, but we took profits last year when share prices have risen. As I said, some of the trends have accelerated and been beneficial in this phase. But we really, on the whole, haven't taken a lot of profits. Some of our largest holdings, like Microsoft, still very keen on some of the themes. They're printing very good earnings numbers, very good profit growth, and very strong revenue growth as well. So these businesses are strong and getting stronger.
Were you active in the markets during the pandemic? Were you sort of looking to take advantage of the lower prices during the worst of the March sell-off? And if so, which stocks have you been buying and why?
So I think there's been three phases this year to sort of navigate. The first one was to identify, I suppose, that the virus and resulting lockdowns were going to be a lot more fundamentally economically damaging than maybe we thought back in January, early February, when it seemed to be more isolated to Asia. Now, that involved selling positions we've held for a long time, like American Express, with a big travel business tucked in there, Booking.com we owned, Carnival, some of the airports. So again, removing some of these businesses that clearly were going to suffer from a very sort of sharp shutdown. Then the phase really, as you say, markets collapsed. very sharply, and it threw up some interesting investments that we've already owned and some companies we couldn't quite get to the share price in terms of the valuation we thought justified them, and gave us a chance to buy quality names again. So not buying distressed companies or financials, but buying companies that have just got thrown out with the market disruption. And key names in there, the obvious ones, the healthcare sector, which again is clearly going to be a big beneficiary of investment spending here. So we bought more holding of Sanofi, AstraZeneca, some of the large names, Roche, across there, Novo Nordisk. So a lot of names in that healthcare, and actually some more of the technology names. So Amazon, again, we topped up. Seemed a bit odd that it should fall. And we're moving now to phase 3, which is where, some share prices have probably, run too far beyond fundamentals. And, we still see the outlook as being a little bit clouded. Unemployment is clearly rising, and the furlough scheme, both here in Europe and, will have to end at some point. So we're beginning to take some profits in some of the stocks that have just moved too far.
Tesla doesn't feature among some of the sort of your sort of big name stocks. Were you ever interested in taking a stake in the business?
No, it's not one we've ever owned. These businesses, again, that have a lot of capital up front, it's not been cash positive. It's consumed cash for a long time. We're willing sometimes to take a short-term view that these businesses are sometimes worth owning if we can see how the cash generation comes through, maybe in the next year or two. So probably into that camp would be a Netflix, where, again, on most metrics, it hasn't been generating a huge amount of cash flow, but we do feel it's in that inflection point. Subscriber growth has been very strong, and we can see how we can get to cash positive. But Netflix is always, Tesla's always been a bit more of a struggle from that point of view. For our investment style, it's clearly been a good investment in where it's gone, but it just doesn't fit with the way we pick stocks.
Sure. Now, it looks like you're keeping some of your powder dry at the moment. The latest trust fact sheet shows net gearing levels at around 0%. So, is this a sign that you're expecting a market correction to materialise in the coming months? And will gearing be utilised if markets do fall notably?
So I always think of gearing as a bit like the sort of sails on a boat. You sort of put the sails up when you feel the wind is sort of fair and you're heading in the direction you want to travel. And then when it gets a bit more choppy and a bit more indecisive, you reduce the sails. And so that is sort of how we're feeling with markets at the moment. We had some net cash from last year, and 2019 was a strong year for markets. And as I say, some of the holdings we started to sell and we raised cash. I don't think I was seeing a collapse in the market, but I was certainly seeing less opportunities to make cash work for us. And I'm sort of seeing that now, really. I don't think I forecast a big collapse in share prices. Maybe some of the excitable investments that's gone into some of the technology names might come out, but I think that should be at the edges of market, really. But it's just struggling to find new names to put in to replace ones where we think price targets have been reached and they're expensive. So it's exactly as you say, powder dry a little bit. If the market comes back or we see a rotation into more economically sensitive stocks like the financials or industrials, we've got some powder to invest in those areas of the market.